everyone, it's V and welcome once again to the Vinance Vault, where we unlock the secrets of financial freedom, one vault at a time. Ever wondered how your income tax is actually calculated? No stress, I'll break it down step by step with real life examples. Now let's get into it. Income tax is the money you pay to the government based on how much you earn. Whether you're employed or self-employed, it affects your take-home pay. Now let's find out how. Your total income isn't taxed right away. First, we subtract things like personal allowance and deductions. What's left is called your taxable income. Let's break down what taxable income really means. Start with your total income. Now that's everything you earn, which includes your salary, side hustle income, rent from a property, savings income, and even dividends from investments. Now, you subtract your tax-free allowance. In the UK, most people get a personal allowance of £12,570. That part is completely tax-free. Then, deduct any eligible deductions, which would include things like pension contributions, charitable donations, or even approved work expenses. What's left? That's your taxable income, the amount HMRC uses to calculate how much tax you actually owe. Once you subtract the personal allowance and deductions from your total income, the remaining amount is your taxable income. That's the part on which HMRC calculates your tax. Now, the simple formula for this is taxable income equals total income minus tax-free allowance minus deductions. Mind you, there's still some other deductions which I will not talk about in this video, else it will be too lengthy as tax is quite a long stretch. I'll make a separate, more detailed video for that. Everyone gets a tax-free allowance. For the 2024-25 tax year, that's £12,570. If you earn below that, you don't pay any income tax. For our first example, we have Sarah who earns £11,500. Since that's below the threshold, she pays zero income tax. Now note, this applies to payee income. If you earn more than £1,000 from sources outside payee, like sole trader, freelancing, or side gigs, you're required to file a self-assessment tax return, even if you don't end up owing any tax. I'll cover this in more detail in another video, as I do get asked this question a lot. Now, for those earning above the allowance, income gets split into tax bands. As mentioned earlier, the first £12,570 of your income is tax-free. Income between £12,571 and £52,70 is taxed at 20%. Earnings from £52,701 up to £125,140 is taxed at 40%. And anything above that is taxed at 45%. Our second example is Daniel, who earns £36,500. The first £12,570 is tax-free. The rest of the £23,930 is taxed at 20%, giving a total income tax liability of £4,786. Our third example is Leah, who earns £70 to £80. The first £12,570 is tax-free as usual, and the next £37,700 is taxed at 20%. The remaining $20,010 is taxed at 40%, bringing her total income liability to $15,544. Next is Dakpo, who earns $148,200. His personal allowance is reduced to zero because income over $125,140 removes it, and so his first $37,700 is taxed at 20%. The next $74,870 is taxed at 40%. And the remaining $35,630 is taxed at 45%. This will bring his total income liability to $53,521.5. This will be rounded to the nearest whole number, and therefore he owes $53,521. Don't forget, there's also national insurance. It's a separate deduction used to fund public services. I'll make sure to cover this in another video. Understanding your income tax helps you make better money decisions. Stay tuned for my next video on how to reduce your tax liability legally. Remember, we're unlocking the power of finance, one vault at a time. If you found this helpful, like, comment, and don't forget to subscribe. Thanks for hanging out with me, and I'll catch you in the next one.